Today I'm going to talk about the economy.
Global economy is looking for a bottom. U.S. Q3 GDP was revised up to 2.1%, an improvement of 0.2. J-PAL gives the market another boost, promising to hit the Fed's 2% inflation target. Consumer sentiment rises slightly from 95.5 to 96.8. U.S. retail sales jump in October. Durable goods came in at 0.6. U.S. consumer confidence drops for the fourth month. Europe is still in a funk. China is slowing on weak data. And let me take a couple of questions right here. How do you see 2020 playing out? Well, I'm looking for small single-digit positive returns with a lot of volatility. A lot of this year's performance up 30% in the S&P 500, up 56% for us. A lot of that is being pulled forward from 2020. So the more money we make now, the less money we make last year, unless you're the mad hedge fund trader who can play it both ways. Another question, how deep will be the next recession? I'm looking for 2 quarters of small negative numbers like 0.1, 0.2, and then it's off to the races again. That's where the golden age of the next roaring 20 starts. And of course, I've written about that extensively. And it is possible we might not even see any negative numbers on a quarterly basis. We just get close to zero, threaten it without actually breaking it. And of course, you could still get a 20% correction in the overall stock market if they think we're going into recession, which we have thought many times in the last 10 years. Okay, weekly jobless claims dropped 15,000, 213,000, again, close to the 50-year low. Okay, and soybeans, my perfect trade war indicator, really gave up the ghost a month ago and have been in free fall ever since. That's because Brazil is jumping in, supplying the Chinese with soybeans, as long as the Chinese are boycotting our farmers because of the trade war. So you could see this fail in the trade talks coming just by watching soybean prices. And by the way, this has been a great indicator of the success or failure of trade talks, really since the whole problem started a couple of years ago. Okay. Bill Davis, can you hear us?
Good morning.
Well, tell us what you got for us today.
Got a couple here. I like Palo Alto. I think it's setting up right around this area for a buy. Deere is already starting to push up. Okay, so if it trades above and closes above the high from yesterday, I would jump in it. Wix is another one that I'm looking for a bounce on, somewhere in that 124, 125 area. And Cummings, too, quite frankly. I think it's going to get a bounce. On the short side, looking at a couple of negative stocks. I mean, I'm going to point out Netflix because it has been bouncing, but I do expect another downdraft on Netflix. The NetEase position, NTES at the bottom, interestingly enough, today's high actually was 325.10, and it pulled back about $7 from that point. So I'm looking for a move down to around the 314 in the short term. Watch to see if it takes that out. If it does, I expect more downdraft. If it doesn't, we'll probably have another bounce back up. It'll bounce around a little bit before we get a meaningful sell-off. By the way, same thing with Netflix. I mean, Netflix is probably going to bounce around a little bit before we get another downdraft. So, keep an eye on it. Obviously, you want to wait for bearish price action before you initiate your short.
Okay, yeah. Palo Alto clearly breaking out on the charts. Deere is a a trade war victim, which will keep suffering as long as this goes on. And yeah, you got a couple of good ideas here.
I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.